Hey guys, Craig from Wattle Accountants. Today we're going to talk about purchasing a ute and how to claim that as a tax deduction. So this is going to be helpful if you've already purchased it and prepare for tax, or if you're thinking about purchasing a ute, how's that going to impact you? So firstly, let's look at the Income Tax Act. We've got here choosing between two methods. So you may or may not be aware of these methods already, but I'm just going to recap. So you got the cents per kilometer method, which simply all you need is the business kilometer traveled. So let's say, for example, that you every week you travel maybe once a day for about 100 kilometers. So you can just easily extrapolate out with that. There's a total kilometers you can declare though of 5,000. Those kilometers are then multiplied by the rate for that year. So 78 cents is the current year. So for example, if you ended up adding up, reasonable estimate was 1,000 kilometers in a year, times it by the 78 cents is going to get you a $780 tax deduction. You can see in this table here, it mentions that you don't need to substantiate. So that's right. You don't need receipts or any invoices or anything like that. All you need is a reasonable estimate. So if you're making that statement, you should use Google Maps to work out the kilometers of what is reasonable. And then you've got both of these boxes ticked, and you can claim your tax deduction. So the next method is this logbook method. So it's a bit more work involved, but usually it will end up being the highest claim, especially if you've made a purchase of the ute in that year. So the first thing we need to do is summarize all your expenses. So you can see here it says dollar value of the car expenses, so fuel, tires, servicing. So this is also the cost of the ute in that year. Just be aware that there's a limit as well for cars if it falls under the definition of a car, which we'll talk about in a sec. So typically, let's say for example, bought a $30,000 ute, that is going to go into this category. So the $30,000 is depreciation for the ute, and then all the fuel, rego, and insurance. Then we multiply that, rather than the 78 cents, we have a business use percentage. So what we need to put together is a logbook, 12 weeks. So from day one to the end, tracking how many kilometers and whether it was business or personal. Let's say, for example, that you did, let's say 1,000 kilometers in that 12 weeks, and 800, or let's say 900 was the business trip. So that means 90% of your car expenses are deductible. So 90% of all the expenses we calculated, like the total cost of the ute, the fuel, rego, insurance, will be the tax deduction. So yeah, it also just mentions down here, you need to substantiate the expense. So there's a lot of work involved with that. One of the big things that people are not aware of is that you need to work out whether it's considered a car or not. Because if it's considered a car, you can use these methods, but if not, you can't use these methods. So why would that matter? Well, if you're trying to claim the cents per kilometer method, you may not be actually able to because it's not a car. No, it sounds silly, but ATO actually has a definition, which if we go over here, we've got, so it's a car is a motor vehicle that is, and this typically will happen with ute, it's designed to carry a load of less than 1 ton, 1,000 kilos. So we've got two examples. So this one's a single cab ute we found, 2016 Toyota Hilux single cab. So we go down, what you're looking for is the gross vehicle mass. That's like the total weight that the vehicle can have before it can move. And then the curb weight is basically nothing in it. So the difference is the payload, so what it can carry, whether it's people or something in the back. So you can see that's over 1,000 kilos. What does that mean? Well, it's not a car, it's just a motor vehicle. And then that means you can't claim the cents per kilometer method. You can't use the logbook method. So, Craig, how do I claim my car expenses in this situation? Well, you just need to claim under the general principles. So you need a reasonable basis to determine how much of your travel is related to business. And even though you're not claiming the logbook method, you can still use the logbook's basis, like a 12-week, or you don't even need to use that at all. You could use a blanket statement and say, this ute is 100% used for work because I have a second to set in. I don't use this vehicle for business. And you don't have to worry or waste your time with any of this, and you can claim all your expenses. But once again, the basis in your statement has to be reasonable. Okay, so pretty straightforward this situation. So obviously, yeah, we can't claim those. But what about if it's a dual cab, or let's say this different vehicle? So this one's a dual cab, so it's great to compare. It's a bit more expensive, but that's not the point of the example. So if we go down, let's look at the weights. So yeah, we've got a total of 3,000, but the curb weight is 2,000, so it's already pretty heavy. So the payload, or what it can carry, people, whatever's in the back, is only 925 kilos. So what does that mean? That's actually a car. It's less than 1 ton. So it's a car, which means you can claim the cents per kilometer method, you can claim under the logbook method, you can actually still claim under the actual cost method, which means you have a statement. But honestly, you have these shortcut methods like the cents per kilometer method. If you go and say, oh, I'm claiming, in this scenario, you've got a $49,000 ute, and you're like, oh, here's my statement, it says 100% of it is business related, blah, blah, blah. They may turn around and say, under an audit, and say, that's not reasonable. Your statement was not reasonable, therefore we deny the claim. That means you have no other basis. You know what I mean? That so you may have thought, hey, it's more safer to do the logbook method. So you go through and tick off, I've got the 12 weeks, I've got the summary of expenses, I've got everything that the logbook method here needs. Same with cents per kilometer method. You can say, look, I've calculated just based on the kilometers. So, I'm safe, basically. So it could be risky, just going with a statement or the basis that you've chosen, they determine is unreasonable. That's why it's always good to get an accountant to tax accountant to check it over to make sure it is reasonable, and also to take that liability off your plate. Pay someone for the advice just in case it's wrong, and then you'll be safe with that. So thanks for watching the video. If you liked it, give us a like, or you got any other questions, feel free to put them down. We're always looking for new ideas for new videos, and thanks for watching.